Hi everyone, here is another video. It is chapter 8. This is our video and it is a great chapter. It is the chapter all about operation budgeting and variance analysis, and then we're going to be talking about the details of budgeting, types of budgeting, and a whole bunch of great stuff, new stuff in this video. And this lecture is a great lecture to understand as well, because you will be responsible of this lecture for the test assignments and whatever is coming up. So guys, speaking of the assignments, class assignments, please don't forget to check syllabus, the course schedule, and or any other assignment deadlines. Make sure you're staying on top of everything. If you have any questions, you can always ask me. You can come to my office, or you can email me. Therefore, everything will be clear, and I don't want you to be lost in this time of the year. So you will be able to turn everything in. So guys, having said that, I am hoping that you guys are having a great week, just like me. And here is the lecture outline. We're going to talk about different stuff, budgeting processes and budgets. Budgeting process and budgets, they are different than each other. Budgeting process is the process of creating budgets. We're going to talk about the types of budgets right here. We're going to use those definitions, 8 different types of budgets. We're going to talk about them. Also, we're going to talk about, and we're going to do some calculations about trend analysis in budgeting. Trend analysis. So hospitality decision makers, they come up with a budget process or budgeting process. How do they do it? Or what are the ways that they follow to come up with next year's, next period's, next week, or next month's budgets? And then we're going to talk about all these right here, and trend analysis becomes an important aspect, important part of the budgeting process. Well, here's the thing, budgeting and forecasting, they are very close to each other, guys, okay? I'm going to tell you why I'm telling this in a second, since we are still in the lecture outline. Forecasting and budgeting, they have a lot of common areas and commonalities. Therefore, it's kind of like an inseparable duo, say when we're talking about forecasting and budgeting simultaneously. So, forecasting, what was it? We learned in chapter 7. Forecasting was the process of trying to come up with the possible events might happen in the future. For example, ADR projections or RevPAR projections or any expense projections. Budgeting, based on the forecasting, based on the actual outcomes, budgeting process is done to mostly allocate the resources we have. Therefore, we will have to analyze the variances in budgeting to see how much we are off from the actual outcomes, or how much our forecasts are, close to the actual outcomes. We're going to talk about determination of variances for, of course, we're going to talk about the intuition behind it first, and then we will be discussing the types of variances for revenues and expenses, and then these are the 3 main types of variances we will have to analyze, and then we will have to discuss in this chapter. And this will be the end of our chapter today. Well, guys, let's talk about the budgeting process and the budgets. But before that, if you have any questions, please do not hesitate to ask me, or send me an email, or come see me in my office so we can discuss what's in your mind. Budgeting process is the process that several financial operational activities are performed in order to prepare budgets for the companies. Again, guys, budgeting process, let me just draw an arrow. That's the budgeting process to get to the budgets, okay? So budgeting process, BP, it's not the British Petrol, but it's BP. So budgeting process is the series of activities to prepare budgets for the companies, for the hospitality companies. So the main objective of budgeting process is to allocate resources, inventory, room, sales, resources, whatever you can think of, is to allocate resources at the right time, at the right place, at the right amount, okay? So this is the budgeting process, and then while we are allocating the firm's resources, we have to include a whole bunch of stuff. Well, while we are trying to allocate the resource at the right time, at the right place, and at the right amount, we have to estimate future sales, future cash collection, cash inflows and outflows, accounts receivable, accounts payable, or cash sales, credit sales, you name it. We also have to estimate the day-to-day activities with working capital, petty cash, you remember from ratio analysis chapter, and then we will have to summarize all these into an income statement and the balance sheet, and then we compile everything to create the budgets, guys. Therefore, since this is the budgeting process is series of activities to prepare budgets. We define that. What kind of activities? Activities in resource allocation, inventory, room, inventory, and all the assets. Resource allocation. Therefore, the final objective becomes to create the budgets, which are company's future plans indicating estimations of revenues, expenses, cost of goods sold, and any other future projections. Budgets include a whole bunch of different stuff, okay? We'll talk about them, but the main objective of budgets, or what's in budgets, are right here. Budgets are very good for planning and forecasting. Budgets are extremely needed for planning and forecasting. The objectives of revenue and cash flows. Budgets includes the objective of revenues and cash flows. Revenues, expenses, cash inflows, and cash outflows. Let's put it that way. Okay. Budgets includes guidelines, benchmark, the standards, okay? And then it creates the basis for future financial performance appraisal or the current financial performance assessment. So they're the same thing, not just time different, they're time difference. Therefore, budgets are critical, budgets are essential, and managers use and prepare budgets to do a whole bunch of stuff, okay? To develop coordinated management procedures, policies, financial operational strategy, and all that. They evaluate and compare the actual and estimated results by preparing budgets, by having budgets, okay? They analyze variances. Remember, second part of the chapter is all about the variance analysis. So they use budgets to analyze variances. Variances for what? For revenues, expenses, cost of goods sold, labor, you name it, we can talk about them. And also estimate sales volume, revenues, expenses, net income, staffing requirements, equipment needs, assets, liabilities, payables, receivables, vendors, suppliers, third-party relationships, OTAs, online travel agencies, so and so forth. In the entire bigger picture, budgets are critical. Budgets are strictly needed for hospitality companies. So what kind of budget do we have, guys? Let me just read this real quick. Okay, so what kind of budgets we have? Let's talk about them a little bit before we get to the calculations. Guys, we have different type of budgets in the world, okay? We have small level budgets, we have small scale budgets, we have larger scale budgets, we have master's budgets that includes every single thing, okay? So we have, bottom line, we have different types of budgets. Let's start with the short-term budgets right here, guys. Short-term budgets, you can tell by its name, they are the budgets that are prepared for short-term purposes, daily, for example, or weekly, or monthly. They don't go past more than quarterly, more than semi-annually. Excuse me, semi-annually meaning every 6 months, okay? So short-term budgets, they do show the operation results, but for very, very short period of time. As I said, could be daily, weekly, and or 10-day periods, or monthly. Monthly and quarterly budgets are the perfect example for short-term budgets. Well, long-term budgets, the opposite of it, okay? For five-year budgeting, 5-year budgeting process, 5-year budgets align next to each other. 10-year budgets for a bigger or big capital projects, which are going to take, let's say, 8 years, 7 years, 6 years, or the huge investments, renovation projects, buyouts, mergers and acquisitions with, let's say, other hospitality establishments. These type of activities, of course these are corporate activities, these type of activities require long-term budgets, okay? Fixed budgets. Guys, fixed budgets are based on a certain level of activity. You can see right here, they based on a certain level of activity or sales revenue. For example, expense estimates are based on the level of sales. Let's say if sales increase by 10%, expenses will also increase by 10%. Well, I'm talking about, let's say, total overhead expenses or total operating expenses. Okay, so they are the fixed budgets, and therefore they are prepared on a fixed level. Fixed level of what? Fixed level of revenue increases or revenue decreases, guys. Okay, so so these kind of budgets we also have in hospitality industries. Okay, sorry. Flexible budgets. Of course, this is the opposite of fixed budgets, meaning unlike fixed budgets, they are prepared based on several levels of activity. Whatever the activity is, could be sales volume, could be group sales, could be meeting space sales. Okay, whatever the activity is, adjustments are made according to the changes. For example, usually event companies use this a lot. Event companies and theme park operations use these budgets a lot. For example, let's say, imagine an event company, they're expecting 1,000 people over here. They say this is their budget for that, for 1,000 people, okay, 1,000 people. But down the road to the event date, let's say this is the event date right here, until we get there, let's say there are 2 months. I'm just giving very hypothetical but clear examples, I guess. If something happens over here, the budget is adjusted to what happened over here. So meaning budgets are adjusted to the changes in the middle of the timeline to get to the event date. Therefore, event companies highly utilize these kind of budgets, and also the theme park, and for some of the hospitality companies, I mean lodging companies, mostly resort or ski resort operations. Okay. Let me erase this real quick, guys. So the next one is the capital budgets. Okay, guys, capital budgets. The capital budget, they are the plans for the acquisition of a new or replacement of the assets. If any hospitality company would like to acquire a new asset, could be a land for recreation and wellness purposes, could be a pool, could be another land to build an additional rooms or additional areas, additional amenities for the hotel. Let's say, I'm just giving you guys an example. Or the replacement project, for example, replacing the AC units for, imagine, 3,000, 4,000 room resort. Okay, it requires a huge amount of money. Therefore, they require capital budgets, which are the budgets are they are the budgets which are specifically prepared for capital projects, renovation projects, or any type of investment, any type of capital project. And asset investments. Okay, guys, we have departmental budgets over here. Departmental budgets are the budgets which are prepared for the department. Okay, meaning, imagine a hotel. Let me just draw a square over here. It's not a little square, but please don't mind my drawing skills. Okay, let me just make it better. This is a lodging property we have, and we know the lodging property have different departments on different scale. For example, this could be the rooms department over here. This could be the F&B department. This could be the convention conference department. This could be the sales general administrative department. So these are, let's say, housekeeping here, front office here, F&B purchasing here, food and beverage establishments are here, conference sales, meeting space sales, recreation spa sales over here, SGA, they are the general. So let's imagine this is department. So every single department, they have their own budgets. Okay, guys? So they are called departmental budget that shows departmental revenues and expenses and departmental the balance between assets, liabilities, and what they use, what they might use, and what their resources are. And departmental budgets shows for the specific department operations. Rooms are different than F&B, of course. F&B are different than F&B. Departmental budgets are different than, let's say, convention or meeting space sales. Okay, so these are the tiny little itty bitty budgets, but again, it works sometimes because every single department has to analyze their cash in, cash outflows from the sales, inventory levels, and or expenses, and or payments and receivables. And departmental budgets goes through a bigger budget. We're going to talk about right now. We're going there. We're going to talk about right now. Master budgets, guys. These are master. You can tell it's huge. It's big. It's the bigger picture. It's the entire operation, guys. Okay, master budgets. So master budgets include so many sub budgets. Let's say master budget MB right here. They include more than one budgets. For example, departmental budgets over here, fixed budgets, fixed budgets, flexible budgets, and any other, let's say, I don't know, capital budgets right here. They include all the budgets, then compile everything, and then they show every single cash inflow. They show every single cash outflow. They show every single revenue, expense item, sales volume, customer traffic, consumer traffic, agreements, vendor payments, vendor receivables, tax payments, audit cost, you name it. They show everything. That's why they are called master budgets. Okay, guys? But, however, let me just read this real quick. In this lecture, we are not going to focus on the master budgets because master budgets are gigantic in nature, and then master budgets, as I said right now, include everything you can think of in terms of budgets in the hospitality operations. Okay, we are not going to focus on them. What we're going to do, we are going to focus on the operating budgets, guys. Operating budgets, they solely focus on the operational activities. Operational activities in terms of what? Revenues right here. Operational activities in terms of what? Expenses over here. Labor, staff, wage, and they're the same thing. Cost of goods sold, okay? Cost of beverage sold. These are the core operational activities. Cost of room production, for example. These are the core of hospitality operations. Therefore, these are the core expense items in the hospitality operations, in terms of the operations. Revenues, sales volume, okay, is one of the most important operating item in the hospitality operations. Therefore, we're gonna talk about revenues which are driven by the sales volume, and then which are also driven by the customer traffic. So these budgets consist of the ongoing projections of the operations. When we talk about the operations, guys, we are mainly talking about revenues and expenses. Okay. We are mainly talking about revenues and expenses. Therefore, in this lecture, as I put it over here, in this lecture, we are going to concentrate on operating budgets, and then we're going to touch base with every single edge and corner of the operating budgets.